Do we know at this point why Beijing is not pleased?
Well, the sources are telling Bloomberg News that the senior government officials are not pleased, or essentially say that the proposed fines or penalties, which we don't know what they are, that have been, negotiated and essentially proposed by the cybersecurity regulator, the Cyberspace Administration of China, or CAC. They've been meeting with Didi since last June, when, of course, Didi had that surprise IPO. I say surprise because they went ahead with that $4.4 billion IPO in New York, despite the warnings, if you will, and the urging of the government not to proceed with the IPO on perhaps data security and national security issues. They went ahead with that. And then suddenly, Didi was put on cybersecurity review and a big investigation, now culminating in what was essentially the regulator's proposal to senior government officials on what type of penalties Didi would face. Would it be a fine? Would it be a breakup of their services and the like? Well, apparently, according to sources, senior officials beyond the regulators are not pleased. They think it's too lenient, according to the sources.
We know that Didi investors will vote next month on the US delisting plans. Where does that leave investors if the Hong Kong IPO is also suspended?
Yeah, because last week we heard that Didi had not proposed listing on another exchange. So that has been put on hold, while we already knew that Beijing is forcing Didi to delist from the United States. And that process has been going on. And in fact, there'll be a vote on May 23rd, and shareholders essentially, I mean, look, if the couple of founders, if they exercise their voting rights, it's a foregone conclusion. But some investors, marquee investors, the big names, Fidelity, BlackRock, SoftBank, a number of them have stayed fairly silent through this delisting, at least publicly through this delisting process. Some investors could be forced to sell because their mandates essentially don't allow them to hold unlisted shares. And once these Didi shares in the United States are delisted, they will likely go to the over-the-counter market, the so-called pink sheets market, where less desirable companies, if you will, penny stocks, if you will, are listed. And some of these big investors would not necessarily be allowed to hold that, so they would be forced to sell. SoftBank, they accumulated huge stakes in this company, in Didi, upwards of 20%. At one time, their stake was worth $16 billion. It's less than $2 billion now. They, however, would be allowed to hold on to penny stocks. But again, what a big fall from grace for the investors as well as Didi. And we don't know the outcome that's going to be the final solution.